Welcome to Listen to the Market for Friday, March the 2nd. Coming to Friday, normal routine. You mark the previous day's lows on the charts just to see what the market does with them, perhaps kicking in with a AA aggressive buy campaign. Thursday's highs also were marked, they were off the top of the page. Second part of the equation is looking at Thursday's price action to see what the message is for Friday. Well, there were two messages for Friday. Number one, non-directional days, so there's no bias in terms of buying side or selling side, be totally neutral, take all setups in other words. The other message for Friday from Thursday was expect a larger range. So the practical application of the second message, expect a larger range, is look to roll up from the smaller time frame to the larger time frame. The kickoff time, formally 7 p.m. my time, is the second last bar there, and that was not a setup either to buy or to sell. It was at new lows for the day, so I guess a lot of people were thinking, oh, low, buy low, sell high. Next hour comes along, and lo and behold, there is a buying setup being formally a FO buy 2R, a FOB 2R. The same FOB 2R is present on the 30-minute chart, notwithstanding the fact that the two charts look similar but actually different in detail. So chart of confluence is also a buy. The 15-minute one, the one based on which the entries in ISL are based, and campaign management in part, is a buy setup. It's an RTV buy with a surrogate, so you're looking to buy at the high through there, ISL through the lows through there. Long, on the breakthrough there, ISL not hit. That's a promise of higher highs. Raise your stop up through there. Not rocket science. Next bar comes along, well, all we can do is raise our stop to there. Two 15-minute bars equals one 30-minute bar. Can we roll it to a 30-minute campaign? Well, we sure can. But that means that the stop is down through there on the 30-minute, down through there on the 15, and it's worse than break even. So it would not be wise to do that. Even with a trail where it is now, looking to walk away with maybe a half hour loss should the market turn down. So again, yes, we can roll. The market is telling us whether we should roll. Next bar comes along and we're stopped out for that half hour loss. Well, now we're forced to sit on our hands until the next hourly bar is complete, because the hourly bar is the one that tells us whether to be a buyer or a seller. So 15 minutes is not a long wait. 30-minute bar looks like that, and the 60-minute bar looks like that. The setup that we have here, courtesy of the market and the L.I.V.E setups, is one that requires the knowledge and application of fluid movements. Specifically, the setup is a staircase to hell. All staircase setups require a timing tool, and in this case a sell timing tool. And the sell timing tool is present, so tick for the 60-minute directional. The 30-minute chart of confluence is also a staircase to hell with a sell timing tool, so tick for that one, so 2 ticks in a row. However, the 15-minute one is not a sell setup, so you're forced to wait for the next bar to come along, and the next bar is an RTV sell. So simply prepare your orders to go short in through there, ISL up through there. Next bar comes along and we don't have entry. Two 15-minute bars equals one 30-minute bar. The 61 is not complete, so we're still operating under the message from the previous hour, being that of a sell campaigns. The 30-minute now is an RTV sell, so that's in line with the 60-minute sell. And the 15 also is a sell. It's an RTV sell. So you're looking to sell lows through there, ISL through there. Well, lo and behold, the market has a different idea and presents a little inside period. Doesn't break the lows, doesn't break the highs, no entry. Still looking for a sell setup, and what we have now is a SIP sell, so it's a new setup, as well as a continuation of the previous RTV sell. The pips at risk in through there, just on 6 pips. They're looking to enter on the lows through there, ISL at the highs through there. Next bar comes along and now we are short. So now we have two 15-minute bars equals one 30-minute bar and also one 60-minute bar. So on the 60-minute chart view, you can see that the short has been triggered. Yes, we are short. 30-minute, the high through there, can we roll? Well, that high there is the second last high. Wouldn't be wise because it's worse than break even. So the market's saying, nope, continue managing it on the 15-minute chart basis. Next 15-minute bar comes along, and we lower the TSL to a TSL through there, locking up just over a 1 hour return. Next 15-minute bar comes along, and it's decision time. What do we do now? Well, let's look at the market. The 30-minute bar presents a lower high and a lower low. That high there is that high there in the 15, so we can roll up. Initial entry was through there. We can bring a stop very close or simply roll to the 30-minute management. The projection for today was an expanded range, therefore rolling is in order. Well, let's just follow this through on the 30-minute chart basis. Lower high, lower low, lower the stop from there, down through there. Next bar comes along, lower high, lower low, this is getting boring, lower the stop down through there. Bearing in mind we're short from up in there somewhere. And the next bar comes along and we've been stopped out. Well, what was the result? Went in through there, got stopped out through there around the 21 level. That was just over a 3-hour return. So thank you very much to the L.I.V.E rules and the setups. That was it. There were some more campaigns, but that's for another time. Don't forget on the weekend there'll be a Q&A session, and also on Monday I'll be giving you a live update of real-time trading, real money, applying the L.I.V.E concepts. Enjoy the weekend. Thank you for your support. Keep those questions coming. Bye for now.